It's already turning out to be an interesting year for property in 2020. Some commentators are suggesting double-digit capital growth in some of our capital cities. Others are suggesting more subdued growth. The question is who you're going to listen to, whose advice are you going to take? Because if history repeats itself, and it surely will, many property investors are going to get it wrong this year and in this new decade. So in today's show, I'm going to have a chat with property researcher John Lindeman to give you some warnings about a new breed of property spruikers who are out there to get you and take advantage of you, so you'll have a better understanding at the end of today's show whose advice to take and what traps to watch out for. I'm also going to share with you a mindset message, and my aim this year is to help you become a more successful property investor and more successful with money and finances and in all areas of your life through this show. And while you're listening to this, interestingly, Pam and I are on our cruise around Africa. We'd be halfway down the west coast of Africa at the moment, but that's okay. That's the wonder of technology where we've pre-recorded this show. But property has given us the ability to have the choices in life and the lifestyle that we want. And so I'd like each week, actually twice a week through this show, to keep giving you tips to become more financially fluent so you can enjoy the life you deserve as well. So welcome to today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
Who do you ask for property advice? With so many mixed messages and vested interests, who can you really trust? At the end of last year, our annual Property Investor Consumer Sentiment Survey revealed the many and varied sources that property investors consult for advice. But since most property investors don't achieve the financial freedom they deserve, since less than 8% of them own more than 2 properties, a better question may be, who should you be asking for advice? And the problem is it's hard to tell. So to help understand a little bit more about the tricks that some property spruikers have got up their sleeves, I thought I'd chat with property researcher John Lindeman from Lindeman Reports. John's got well over a decade of experience researching the nature of dynamics of assets, and he's been a leading property market researcher and author and commentator, and like me, a property investor for many, many decades. So he brings quite some perspective to this. Welcome, John.
Hi, Michael, and hello, everyone. I'd like to wish you all a happy new year as well.
Yes, it's come again, the beginning of a new decade, John, which I think is also going to bring out a whole lot of new advisors. Some of them are creeping out of the woodwork already.
They are indeed, and we've noticed this. We've been around a long time, and whenever the market starts to move, then you find that all the spruikers come out and start to promote their wares.
Well, you used the word spruiker, and I looked it up. There's no real proper definition of it, but I know the ACCC has warned property investors to be careful from what they call property spookers who are motivated to gain money at your expense. And they suggest be careful, don't risk your money or your assets by people who are giving misleading advice. Now, I know that you do a lot of research and you've got some great reports, but it's interesting how you can twist research, John, to almost give any answer that you want.
That's right. And in particular, if you've got a vested interest in selling property, for instance, in some area, then you're going to put that area in its best possible light. And
what do you mean by that?
Well, there are a number of statistics that people can use. Like one is past performance. They might say, this area's got really high past price growth performance, but they'll use the figures that suit them. To give you an example, Michael, there's a former mining town in Queensland called Moranbah, which boomed during the mining years. And in the last 12 months, its price growth has been around 18%. But when you look at the last 5 years, it's still about 40% below what it was, 5 years ago. So anyone trying to spruik some sort of property in Moranbah would use the last 12-month figure rather than the last 5-year growth figure. And conversely, other areas, say, which have fallen in price recently, they'll use the longer term figure that suits them. So they'll just pick the data that fits the picture they want to present.
Well, it's interesting. So, how do you decide who you speak to? How do you decide who you ask? I know a lot of people actually don't even ask anybody, and that's probably not good. Others ask family and friends, and unless they're property experts, have a fun chat with them, but don't take their advice. The problem is there's 25 million property experts in Australia. Everyone thinks they know about it. Don't ask a real estate agent, because the real estate agent's really basically there to sell you a property. It's his job, morally, legally, to represent the purchaser. Unfortunately, John, there's a few accountants and financial planners who seem to have a bit of a vested interest. They get a commission by referring to certain property marketers.
They do indeed. And I think also you've got to be very wary of these free events. You'll find that you go to a free event, it might even go for a number of days. And I had someone the other day who said they went to this event and there was champagne and canapes. And I said, yeah, but who's paying for that? Somebody is ultimately paying for this. And of course, what happened towards the end of the 2 days was the doors were locked and nobody was allowed out until they'd more or less, gone through this hard sell. And it was all about off-the-plan properties that these spruikers were trying to sell.
Well, we'll get onto that in a second, but probably it's a good time for me to give a disclaimer, because I have been running property educational seminars for 19 years. But, John, I've actually never sold any properties from the back of the room. In fact, my business model, I'd never sold any properties at all. For 19 years, I've been running educational seminars, writing books and blogs, as well as mentoring clients. And I've been doing it, and we're running this podcast. You and I have these regular chats to increase other people's levels of financial fluency so they don't get sucked in by these dodgy investment schemes. But unfortunately, with the market picking up and the media reporting good news, there's a whole generation, there always is, of new people coming onto the market who don't have the history or the memories that we do.
That's right. And I mean, it's quite easy to Google people and see what track record they've got, how long they've been around, and if they've been reported or referred to the Fair Trading or ACCC. There's very easy ways you can check the bona fides of anyone. But I always say, well, what credibility do these people really have? Have they written books? Have they done, like we're doing now, webinars that inform rather than try and sell?
It's interesting because it's so easy today to get a good website up, to make yourself look good. So I think some other things to ask is, have they got a stock list of properties they're selling you from? Because it's interesting, people go to these financial advisors, these property marketers, and they always seem to have something just right for you in their drawer. They pull it out and that's just right for you, as it is for all the other people. Are they offering you property rather than a strategy to start with? Maybe you should be careful of somebody who gives you advice before they found out all about you, about your needs, about your plans, about your risk profile. John, a couple of years ago, I remember speaking to a radiologist, a doctor who lived in South Australia, and he was sold by a property marketer for cash flow positive properties in regional Australia. And John, he had significant cash flow because he was a high income earning doctor. He needed capital growth, not cash flow. But the spruiker really didn't tailor anything for the client. All he did was pull out his stock list.
And they'll make promises based on expected growth. They'll say that this area is predicted to double in value over the next few years, or it's got high population growth expectations. They'll make these sorts of undertakings or forecasts about areas that have got absolutely no credible foundation.
Well, that's the difference between the background and the research you do in your reports. So to suggest that property values are always going to rise, doesn't work. I've seen some of your fantastic charts where you show that, yes, every state does have its day in the sun, and they've all done pretty well over the long term, but they've all had quite long periods where there's been minimal or no growth, John.
That is exactly right, Michael. And when the growth occurs, it's usually pretty dramatic, but only for a few years. And it's also another thing they will tend to do is talk up areas they've got an interest in selling you a property by referring to infrastructure. They'll say, "Oh, there's a new hospital being built or a new university or something like that," to try and get you to buy property in that area.
Infrastructure is an interesting one because it does create short-term economic growth. It does create jobs in the short term, but it doesn't always create long-term capital growth, does it?
No, it in some cases you might find there's a university that's expanding, and so they have more students, and so there's a need for more, student rental demand, and so yields may go up a little bit. But I always say, look, infrastructure projects like hospitals and universities and shopping centres attract patients and students and shoppers. They don't necessarily attract people who want to buy property.
But that's what you want. You want people who want to own houses in the area where you own an investment property. Not that you want to sell it to them, but you want them to buy properties around you and push up the value of your property. So you're right. I don't particularly want to be right next to a hospital, right next to a university. But if there's actually a new light rail, like's happening in New South Wales in a number of locations, or if there's a new train station, or in Melbourne where they're getting rid of some of the level crossings, some infrastructure is good, John.
It is good, and it can kick along markets quite dramatically. But the other critical thing is if there's an oversupply of properties, then even that rise in demand mightn't be enough. It's just not about demand, it's also about supply, and you've got to look at both of those elements.
Now, you look at that in your research, don't you? So what bits are you looking for? What are you researching?
Well, what we're looking for is areas where the supply and demand are about equal. In other words, the people are finding properties, but prices aren't actually going up. But the rate of demand is such that it's going to outpace the supply. And so we'll start to get people competing to buy properties. And, that's where you find, and these areas tend to be areas that are well located, well-established areas where the supply simply can't increase. So you've got, well-established suburbs in, say, our capital cities where the supply is limited. And if the demand rises, then prices start to go up.
Sure. So be careful about all those other new developments there. And that's also the same with the new outer suburbs, John, where over the next little while, as population is growing, we're going to get new estates and new estates, but there's another opportunity for a new estate just down the road. So while physically the area is growing and population-wise it's growing, that doesn't necessarily lead to capital growth because of unlimited supply almost, and also because of the demographics of the area, lower wages, young families who have to buy there because they can't buy anywhere else, aren't able to anymore push up property values.
That's right. And what our research has found that the new outer suburban areas, when they're developed, for the next few years, they actually go backwards in price. And that's because these people are struggling. They've got to pay off the loan and start buying furniture and everything for the property. And the area itself is not really hasn't got all the facilities and services yet that they need. So the trees are growing, the bus services are coming, and it all takes a while for that to happen. So we find there's very little growth in those outer areas initially anyway.
Well, yes, but I've seen reports, as I'm sure you have, of the spruikers and the marketers saying there's significant growth because 2-3 years ago, the average price of a property was related to a vacant block of land. And now all of a sudden, the common property has got a house on it. So it's more the change of nature of the property that's gone on, as opposed to if you compare the resale of a new property, as you said, if you tried to sell it again down the track, you wouldn't get your money back, would you?
That's right. And the other thing that I've noticed with these sorts of the sellers agents and project marketers is they'll talk about the fact that they've got acquisition experts and access to off-market properties, all of these sorts of things that sound good, but all they're warning signals telling you that they're actually selling property.
Well, also rental guarantees and fancy incentives. Currently, only a couple of days ago in my inbox, I got from a developer who thought maybe I could sell their project to some of our clients, which we would never do, some amazing incentives they were giving for people to purchase properties. And also, they offer very, very significant commissions for referrers. The problem is somebody's got to pay for that, and that's the end buyer, isn't it, John?
That's right. And a lot of these schemes where they offer you deposit back, or even I've seen double deposit back, furniture provided or entertainment centres, a holiday in Bali. And for investors, they'll give all sorts of incentives. The problem is all of this is loaded into the purchase price. So it's not reflective of the value of the property, but just simply the amount you're paying for it. And when you think about it, if you're paying stamp duty on the property, then you're actually paying tax on these things you're getting. But the worst problem is when you try and sell it, you find that, of course, it's worth a lot less than what you thought.
Sure. So what should an investor do? Well, I think the first thing is you should educate yourself. Of course, the problem is who do you listen to? So be careful of somebody who doesn't tell you about the risks. Be careful of somebody who's got a one-size-fits-all approach. Be careful about people who talk a lot about investing but have actually never done it themselves. Educate yourself by listening to podcasts like this, by getting reports or reading the blogs that John Lindeman puts out at Lindeman Reports, or we do at Property Update. And remember, there's a huge learning fee involved in getting in the property market. Unfortunately, a lot of people pay that to the market. Like we said, they just lose out. Another way, of course, is to get a trusted advisor on your side when making property investment decisions. Because a good advisor is going to, first of all, start out finding out what you want, what your hopes are, what your fears are. And then they're going to be future focused and help you achieve your long-term goals. So it's not just this property, it's actually how's it going to help you get to where you want to. And be careful. Most buyer's agents, and John, a large part of my business is buyer's agency. They are salespeople. They're transactional. They're helping you. They're actually helping you get a purchase. So we believe you actually need, before that, a strategic consultation of property strategists. And really, in many ways, you even need even more holistic advice. You need to get people who are looking at your financial circumstances, the right finance, the right ownership structures. So you need more than just a property strategist. You need more than just a buyer's agent. But I also believe it's important to educate yourself. And that's where you come into the picture, John, because you also have to know what questions to ask. Otherwise, you can get taken advantage of.
That's right, and it's important to look at when you go to events or hear webinars or whatever. What are they not telling you? It's things they're missing out, and the sorts of things I mean by that. If they talk about past price growth performance, which years are they talking about, and what are they leaving out? If they talk about projected population growth, what sort of people are they? Who's going to be moving into the area? What types of housing will they be preferring? And what about future developments? If they're talking about new housing estates, well, how do you know there's not going to be a massive oversupply in that area? So always become critically reinforced with questions that you want answered. And as Michael says, you can't really go past the services of getting a good buyer's agent, a strategist who knows the market and works in your interests, not in the interests of the seller.
Now, John, you mentioned a moment ago that people talk about past performance as a guide. Others talk about only buying areas overdue for growth. It seems like there are two different schools. Only buy areas that have stood the test of time, or no, you've actually got to look for the next hotspot. Have you noticed that?
Oh, yes, it's very common in the market. And what you'll find is that there's like two different groups of experts using past performance. It's a very powerful thing because there's many sayings, past performance is the best indicator of future performance and so on. But with the property market, it doesn't work. You'll find Some people saying that you should only buy in areas that have stood the test of time. They've had really good high price growth in the past because that means it's going to continue into the future. And then others will say the opposite, and they say, well, no, actually, if there's been very little good growth in the past, it means it's overdue for growth, and therefore these areas have got the best potential. So you can see that they're completely contradictory, and you've
They
got to be
seem
very
logical, though, John. When somebody says it like that, you can understand why inexperienced investors could believe it's right.
Yeah, I mean, if someone says to me, "Look, Brisbane hasn't gone up in 6, 7 years; it's overdue for price growth," and we've had every expert pretty much predicting the imminent boom of Brisbane's housing market since 2013, but it hasn't happened because that's not enough reason for it to boom. In the same way, we've had a number of other experts that were predicting continued house price growth in the mining town areas, some well-known people who said that it was their past performance that indicated that growth would continue. And of course, we saw what happened there at the exact opposite. So while it's useful information, you've got to look at the underlying dynamics. They're far more the reasons why these things have not gone up or have. That's what's important.
Yes, and also you've got to look, in my mind, at what's happening in the future. So just looking in the rear vision mirror isn't enough, as you've clearly said. So what we like to look for is economic growth, which leads to wages growth, population growth first, and then people coming there, and then eventually wages growth, and then those people are going to rent or buy. So it's a combination of things, isn't it? You need population, you need people, but they also need purchasing power because, and it's not because we want properties to be cheap, but you want them to have good incomes because in the very low interest rate environment at the moment, another small drop that may occur, may not occur, isn't really going to change people's purchasing power. You're needing to find areas where people have got good wages and higher disposable income. And that's not happening in large parts of Australia at the moment, John.
No, it's not. And what we have found is that there are some suburbs that do continuously outperform others. There are well-performing suburbs over long periods of time, and they tend to be in well-established localities where you can't get additional stock being added to the market. The leafy inner middle distance suburbs, family homes, good market tightness, price stability. And you'll find that even though they're the best areas, they're well-established localities, but even there you'll find some that where prices have slipped behind others, and therefore you can use both strategies to your advantage by saying, well, I'm going to go for the best long term, but I'm also going to look for those areas where prices have maybe fallen behind the others, and therefore I'm going to get good imminent price growth as well. So
That's the best of both worlds. That's really
yeah,
good. So I think moving forward, our demographics, our jobs are going to change. There's lots of stories about 30%, sometimes 40% of our jobs not going to be around at the end of this brand new decade we're just entering by 2030. Now, that doesn't mean 30-40% of our population are going to be unemployed, just like Geelong and Adelaide have gone through periods of transition. It's interesting. Geelong, despite losing all the car industry, has been one of the best performing markets for a long time. And Adelaide lost the car industry and other manufacturing, and it actually has just stumbled along, hasn't it? So you've actually got to dig much deeper when you're doing your research.
yeah, and as you say, these areas have reinvented themselves, and that's a thing we find happening in those markets. You mentioned South Australia, Whyalla. That's where the steel industry was closing down, and they've had to reinvent themselves. But we're a very resilient people, and we have the ability to do that. And as you say, Geelong is one of the best performers now in Victoria.
But if one looks at that trend, you're going to find that many of our jobs are going to be done by fewer people, maybe more productively, or by robots or artificial intelligence or overseas. So be careful of investing in areas where the demographic basically is people whose jobs may be less secure at the end of this decade than at the beginning of this new decade. And so it goes back to what you said a moment ago, John, those established leafy higher net worth areas. And it's not a judge of people. It's just really, I'd rather invest where people have got high disposable income and can afford to and want to live there. Aspirational areas. And John, I also like gentrifying areas, because what other people are doing around you is going to pull up the value of your property too.
That's right. And there's a very simple way to look at this, and that is that when you look at those desirable areas, the leafy inner and middle distance suburbs, when you look at the way that Sydney and Melbourne in particular have been developed and are expanding outwards and upwards, they comparatively become more and more rare because there's more and more suburbs on the outskirts, and that makes these suburbs even more desirable because there's not comparatively so many of them. So that's where the growth is, and that's the reason why the growth is comparatively over long periods of time much better.
I think it's also partly because in these middle ring, more affluent suburbs, there's not as much development to house the millions of people that are going to be in Australia at the end of this decade that aren't there today. There's going to be a lot of new development, the high-rise developments closer to the CBD, and there's got to be all those new estates in the outer suburbs. But in the middle ring suburbs, even though there's infill development, it can't be built at that large scale, partly because of NIMBYs, not in my backyard, or notes not over there either, partly because of local town planning. So we're not actually building enough for all the baby boomers like you and me that need different sort of accommodation than we did 30, 40 years ago.
That's right. And if you're a developer, you're not going to knock down a house in Toorak, which is going to cost you several $1 million to do, if you can do that somewhere else at a quarter of that price. So it tends to, as you say, the development occurs in other areas, and these areas are left alone.
Well, we've got some interesting times ahead. John, I enjoyed our chat, and I hope the message came across that watch out for a new generation of spruikers. That doesn't mean you shouldn't take advice. It means be really careful whom you take advice from. And John, I appreciated your comments and some hints about what to watch out for. We'll be having our regular chats on the Michael Yardney podcast to keep educating people. But if people want to find out a bit about you between now and then, how do they find out about you?
Well, the easiest way is just to go to lindemanreports.com.au. That's our website. There's a number of blogs there. We update information on our site regularly. We sell predictive reports, and we also have a free newsletter. So please, feel free to subscribe to the newsletter and get informed. And I think if you go to any events, unless, of course, it's an event that Michael's running and they offer you champagne and canapes, then something's up.
I offer water, bottled water. And that's about it, because I can't afford it because there's no big money to be made in it. But I hope the education that you're giving, that I'm giving, is going to spread the word. I think both of our business aims is to educate more people, to stop them getting into trouble, because we've been around a long time. And I know every now and then we play this little game. We had the chat even off air before we started. Where are they now? Where have the spruikers been hiding? Because we know they keep coming back, don't they, John?
They do, and they come back when the market enters its growth phase, and you'll see unfamiliar names. And what worries me is they present themselves as property market experts because it's an unregulated industry and they're allowed to do that, but they're not experts. You have a look, Google them, and you'll see that they weren't, to be seen when the market wasn't performing well.
I think it's a good point. It is an unregulated industry. People don't realise that it actually takes longer to do a course to be a nail manicurist and put those nails on in all the salons we see in our shopping centres than it does to get up on stage and talk about property. And it's something that others in the industry, including us, we were foundation members of PIPA many, many years ago, the Property Investment Professionals of Australia, promoting the government to suggesting to the government to try and regulate the investment advice industry, but it seems to be just a little bit too hard or not politically correct for them. So once again, thanks for the great chat, John. Look forward to catching up with you again real soon.
Thanks, Michael, and bye, everyone.
Well, that was an interesting chat with John Lindeman. In a moment, I'm going to share with you my mindset moment, but I'd like to just clarify a couple of things because John explained that you've got to be careful who you listen to. In fact, we both said that. And I mentioned a bit about property strategists and buyer's agents. If you think about it, a buyer's agent, they're really order takers. They're going to fill an order that's given to them by you or by a property strategist, but they tend to be biased to the areas they've got expertise in. And this may not necessarily be in your best interest. So I believe you actually need to have a property strategist whose expertise is to design the order that suits your specific needs. And then they're going to have a talk about your long-term wealth. They're going to be your long-term wealth creation partner. They should annually review your performance of your portfolio and provide you with recommendations and opportunities, as well as telling you sometimes it's best to do nothing. So as I explained to you, watch out for those people who've got a one-size-fits-all approach. Watch out for those who don't talk about the risks that are available in the market, and those who actually haven't done it or achieved it themselves. So in my mind, you need a property strategist to help design your financial property future. You need a buyer's agent to implement that order, but you actually need more than that. You actually need somebody who can give you some holistic advice and look at also what's happening in the market, what's happening in your economy, what's happening with financial planning, with estate planning. And that's the services that my team at Metropole provide to our clients. So if you want to find out a bit more about how you can benefit from a more holistic approach and taking advantage of these new markets in 2020, go to metropole.com.au and you can find out all about us. Oh, by the way, we spoke about property seminars, and you're going to start to be getting information about my upcoming series of seminars in Melbourne, Sydney and Brisbane shortly. And if you're interested to take advantage of this new property cycle and you don't want to be sold a property at the back of the room, because as you already know, we're not going to do that, watch out for the promotions of my property seminars. I'll leave you a link in the show notes, and you'll be getting emails about it. Go to propertymarketupdate.com.au. I'd love to see you there, where myself, Dr. Andrew Wilson, and local area experts are going to help you navigate through 2020 so that at the end of this decade, you're going to end up a much more successful property investor. Now let's get on with my mindset moment.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Well, at the beginning of a new year, you've probably made some New Year's resolutions, and you've probably had time to have some dreams about your future. Remember, that's what this regular podcast's about, to help you achieve your dreams. But actually, you've got to make your dreams a reality, because without action, dreams are really just a belief. Now, interestingly, a study showed that 96% of college professors believed they had above average teaching skills. Another study showed that 50% of high school students believed they're going to attend law school, medical school, or some major course. Interestingly, when Time magazine asked in a survey, are you in the top 1% of wage earners, 19% of the population did, and 36% expected to be. Really? So I guess what I'm trying to get to you is that a dream without a plan is soon going to be exposed. There are two kinds of people in this world: those who accept their life and those who lead their life. They're the pilots of their life, not a passenger just being taken along. So some people just get up, look at their life and hope something good's going to happen. On the other hand, successful people say, I'm going to make something happen. I'm going to build on this trust. I'm going to make this relationship work. I'm going to take control over things that I've got influence over. I'm going to lead my life. Successful people say things like, I'm going to create a personal learning agenda that will help me fulfill my dreams. So what's the lesson from this? The key to transforming your dreams into reality is to set goals that can be broken down into doable steps. If there's a gap between what you know and the skills you have and the information or the skills that you're going to need to actualize your dreams, then you're going to have to do a few things to get there. In fact, there always will be a gap. Otherwise, you already would be there. So let me go through 7 steps that you can use to make your dreams a reality. So 2020 is going to be a great year for you. First of all, start with the end in mind. You hear this all the time. Determine the goal. Ask yourself, where do I want to be next year? What do I need to do to accomplish these goals? Your answers instantly become your learning agenda, because you are going to have to learn new things this year. Number 2, assess the skills or knowledge you're going to need. Some goals won't require any new skills or knowledge, but others will. What specific skills are needed to make your dreams come true? What skills have you already got that you possess, but you could improve 25% this year? The next step is to explore the best sources. Now, for some people, it's going to go back to college, school, education, uni, enroll in a training course, or another way to do it is to get mentors. Have a relationship with mentors who can teach you. You know that for 15 years I've been running a mentorship program. Go to michaelyardney.com.au and you can find out about it. Or Mark Reed and I run a mentorship program for business people at Business Accelerator Mastermind. You can go to Metropole Mastermind and find out about that. So, explore the best sources. Number 4 then is create your learning agenda. Now you've got the information, start a learning plan. You actually have to educate yourself. You have to get to the next level. You've got to put it in writing of what you're wanting to achieve. And that way it's going to keep you on track. And then begin. But begin with the most important. Don't start with the hardest or the easiest. What's the most important thing you can do right now that's going to get you to the next level? The next step, step 6, is get moving. Just do it. Get something done. What steps can you do in the next week? What steps can you commit to doing that you can finish in the next week? And you listen to these mindset moments each week, I hope. So this is probably the most important one. Step 7 is identify your limiting beliefs. You know from my previous chats with you that we all have them. But when you identify them, they begin to lose their power. So don't doubt your dream. Instead, think about what you're saying, that self-talk that you're saying that's going to stop you achieving it. Things like, I'm too young. Other people say, I'm too old. Others will say, I don't have time. I know a lot of people say, I don't have the money, or I'll never follow through. Someday I'll. That's an island in the middle of nowhere where you're never going to get to. Someday I'll. So every time you do something that you think you can do and you achieve it, your confidence is going to build. Remember, your thoughts lead to your feelings lead to your actions lead to results. So we're going to get your positive thinking happening, because that's going to build your confidence, and your confidence is going to lead to more action as well. So enjoy this new year. Take advantage of this new year. Get your dreams on paper, set some goals, work out what skills and knowledge you need to achieve those goals, and then do it. And I want to keep sharing my regular mindset ideas with you. So keep coming back to the Michael Yardney podcast, and together let's make it a great 2020. Well, thank you for listening to today's show. I hope it's given you some inspiration to move forward more positively in 2020. Now, as I explained at the beginning of the show, I'm away on vacation, but I still keep reading. I still keep learning while I'm away. I still keep listening to podcasts, and I'm going to help keep making this a good year by bringing you the Michael Yardney podcast twice a week. Now, if you got benefit from it today, I'd love you to share it with some of your friends. There's a share button at the bottom of every podcast app, or you can just talk about it on Facebook or Twitter, whatever you like. The point I'm making is that I'm trying to make you more financially fluent, and I'd like you to help me in my goal by making other people more financially fluent as well. And if you've got some benefit, I'd love you to leave a review on iTunes or whatever podcast app you listen to, because if I read out your review, I'd love to gift you one of my books as a way of saying thank you. All you've got to do is email me, michael@metropole.com.au. And Nickel Pickle Tickle sent an message from the United States saying, thank you, Michael, for all the sound investing guidance and information. I live in Eugene, Oregon, USA, and although much of your focus leans towards Aussie markets, your overall mindset advice and investing experience very easily and effectively extrapolates to my markets in the US. I enjoyed listening to you so much over the last year. I've been inspired to spend a month in Melbourne with my family on vacation in January. Hope all is well for you. Thank you for giving back to the property investment community. Cheers, my friend Nick. Now, Nick, I'm really sorry that when you listen to this show in January, I'm not going to be around to say hello to you, because I'd have loved to catch up with you when you're in Australia. But thank you for listening from afar. In fact, I know we have a very significant overseas audience, and it always tickles me. So Tickle Pickle, thank you for tickling me and making me feel good with your review. Now, if you want to catch up in between the show, remember my property update daily newsletter is going to give you lots of advice about property tax, finance, success, money, and all the social media, including in particular Instagram, which I've become a little bit addicted to, so you can catch up with my overseas vacation. Just look up Michael Yardney on Instagram, and I'd love to be your friend on Instagram and see what's happening in your life. Catch up with you real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?